Welcome to Thailand Podcast News, your go-to source for all things happening in the land of smiles, where our hosts, Brett and Brooke, talk all things Thailand. Whether you're here for the latest updates from Bangkok to Phuket, Pattaya to Hua Hin, or just want to stay informed on expat life, feel-good stories, and trending topics in Thailand, you've come to the right place. Before we dive into today's episode, don't forget to hit that like button and subscribe if you love all things Thailand. And hey, we'd love to hear from you. Drop us a comment below to share your thoughts or let us know what topics you want us to cover next. Now, let's get into today's podcast. We've got a fantastic lineup for you. Let's dive right in.
Hey everyone, and welcome back. Today we're diving into a topic that's been causing a lot of buzz lately. Thailand's new tax rules.
Right.
And specifically how these changes are impacting expats. We've got a whole bunch of sources here, articles, forum discussions, even some legal analysis to try and make sense of it all.
I know, it's a lot to unpack.
Yeah, so let's jump right in.
Sounds good.
So to set the stage, Thailand's been going through some pretty significant tax reforms this year. And the goal, at least from what we're seeing, is to bring their tax system more in line with OECD standards.
Right.
Which I guess signals to the world that Thailand's open for business.
Yeah, it's a way of saying, hey, we're playing by the international rules.
Exactly.
You know, trying to attract more foreign investment and all that.
Makes sense.
Yep.
But for expats who've already made Thailand their home, these changes have been causing a lot of anxiety, to say the least.
Yeah, there's a lot of uncertainty and confusion out there.
Oh, absolutely. One of the biggest changes we keep seeing pop up is this whole thing about reporting foreign income.
Right. That's the one that's got everyone talking.
Yeah, it seems like if you spend more than half the year in Thailand...
More than 180 days, to be exact.
Right, 180 days. Then you're now required to report any foreign income you bring into the country.
Okay, so this is a really important point, and one that I think a lot of people are getting confused about.
Okay, let's clear it up then.
It's about the income you bring into Thailand.
Okay.
Money that stays in your overseas accounts.
Right.
That's not being taxed under these new rules, at least not yet.
Ah, so it's all about the transfer.
Exactly. It's when you transfer that money into Thailand that it becomes taxable.
So that's a crucial distinction.
Definitely.
Yeah.
And it's one that people need to be aware of.
Because, I mean, we found an article that said something like 55% of expats are considering leaving Thailand because of all these tax changes.
Wow, 55%.
Yeah, that's what it said.
Yeah.
So clearly people are worried.
Yeah, I can understand why.
Yeah, it's a big deal.
A lot of people are worried about this double taxation issue.
Okay, so let's break that down. Double taxation.
Yeah.
What does that actually mean for, like, the average expat? Like, so for example, you're earning rental income from a property back in your home country.
Okay. Yeah.
And you want to transfer that income to your Thai bank account.
Right.
Would you end up paying tax on that income, both in your home country and in Thailand?
That's the risk.
Oh, no.
And that's where these tax treaties come in.
Okay, tell me more about that.
A lot of countries, although not all of them,
Right.
have these agreements with Thailand.
Okay.
And they're specifically designed to prevent double taxation.
Oh, that's good.
Yeah. So they lay out all the rules
Right.
to make sure you're not getting taxed twice on the same income.
I see.
But even with a treaty in place, things can get pretty complicated.
So this is where people need to really pay attention.
Absolutely.
Do you have income coming in from overseas?
Yep.
And if you do, does your home country even have one of these tax treaties with Thailand?
Those are the first questions you got to ask yourself.
Exactly.
Because these changes are going to hit everyone a little bit differently.
Yeah, it's not one size fits all.
No, not at all. For example, some people are wondering about capital gains tax.
Okay, right.
Let's say you sell a property overseas. Like, how does that play out under these new rules?
Ooh, that's a good one. In fact, one of the articles we found talked about a retired couple who sold their primary residence back home and moved to Thailand.
Right.
And they were really worried about getting hit with a big capital gains tax bill.
Oh, yeah, I bet they were.
But as it turns out, they didn't need to worry.
Oh, really?
Yeah. Capital gains on the sale of a primary residence
Right.
are often exempt from taxation in the home country.
That makes sense.
And in their case, it sounds like Thailand didn't tax them on those gains either.
Probably because of a tax treaty.
Yeah, most likely.
For the-
Happy ending for them. But let's flip the script. Imagine you're a remote worker.
Yeah, a digital nomad type.
Exactly. You're earning income from clients all over the world. How did these rules apply in that kind of scenario?
Well, that's where it gets a little more tricky.
Oh, boy.
But there is one interesting option that some remote workers might qualify for.
Okay, tell me more.
It's called the Long-Term Resident Visa, or LTR visa for short.
LTR visa.
Yeah.
Okay.
And this visa offers a flat 17% tax rate on all your income.
Whoa, 17% on everything.
Yep, everything. Income you make in Thailand.
Okay.
Income you make anywhere else in the world.
Ooh, that sounds pretty good compared to Thailand's regular tax rate.
Yeah, it can be a pretty sweet deal.
But I'm guessing there's a catch.
You bet there's a catch.
Yeah.
It's not that easy to get this LTR visa.
Okay, so what's the catch?
You have to meet some pretty strict financial requirements.
Like what?
Well, for instance,
Right.
you might need to prove that you have an annual pension income of at least $80,000.
Oh, wow.
Or you might have to make a substantial investment in Thailand.
Okay, so it's not for everyone.
Definitely not. It's really geared towards a certain type of expat.
Yeah, someone with a pretty solid financial foundation.
Exactly.
Which is a big contrast to people who aren't on the LTR visa.
Right.
Because they're subject to Thailand's standard progressive tax rates.
Yeah, the ones that start at 0% for the lowest earners
Right.
and can go all the way up to 35% for the highest earners.
Whoa, 35%.
That's the top rate.
That's a big jump.
It is. And it really highlights how important it is to understand all these different options and how they apply to your specific situation.
So it seems like we're dealing with a pretty complex puzzle here.
That's a good way to put it.
A lot of moving pieces.
Yep.
And each piece represents a different income source or residency status or tax treaty.
Exactly. And to solve this puzzle, you need to understand how all those pieces fit together.
And maybe, just maybe, get some help from an expert along the way.
Having a good tax advisor can make all the difference in the world.
Couldn't agree more. All right, we've covered a lot of ground in this first part of our deep dive. We've talked about the big picture goals of these tax reforms. We've explored the whole issue of reporting foreign income and the potential for double taxation.
Yep.
And we've even touched on some specific scenarios like the retired couple and the remote worker.
It's a lot to take in, that's for sure.
So if you're feeling a little overwhelmed right now, don't worry.
You're not alone.
No, you're in good company.
We'll be back in the next part of our deep dive to break down some more real-life examples.
Yes, and we'll also explore some of the nuances and exceptions that you need to be aware of.
So stay tuned. There's much more to come.
We'll see you soon.
Bye for now.
All right, so we've laid the groundwork.
Yeah.
Thailand's serious about changing its tax system, and that definitely means changes for expats.
Big time.
But like we said before,
Right.
It's not one size fits all.
No, definitely not.
And the details can get really complicated.
Oh, yeah. It's like a puzzle.
Okay.
Where each piece is like a different
I like that.
income source. Or your residency status. Or a tax treaty.
Okay, so how do we put this puzzle together?
Well, let's look at some real-life examples.
Perfect. Because I think a lot of people listening right now are
Yeah.
probably thinking about their own situation.
Exactly.
Like, let's say you're living the dream in Thailand.
Okay.
You're working remotely.
Right.
You've got income coming in from clients all over the world.
Mm-hmm.
How do you even begin to figure out what's taxable and what's not?
Well, first things first.
Okay.
You got to figure out which of those 8 income categories we talked about apply to you.
Right. Those 8 categories.
Is it freelance income? Is it investment income?
Right.
Rental income from a property overseas? You know, that kind of thing.
Once you've got that sorted,
Yeah.
then what?
Then you can start looking at whether there's a tax treaty between Thailand and the country where that income came from.
Right. Those treaties are so important.
They are. But even with a treaty,
Yeah.
there can still be a lot of confusion and uncertainty. I mean, I was reading through some online forums the other day.
Oh, yeah.
Yeah, and people are really struggling to figure out how these new rules are actually being applied in practice.
Well, that makes sense. Tax law is rarely straightforward,
Tell me about it.
especially when you're dealing with multiple countries
Right.
and all these different interpretations.
It gets really complex really fast.
Oh, yeah. Like, for example, I saw a whole discussion about how these rules apply to income that was earned before the changes even took effect.
Ah, yeah, that's a big one.
Like, what if you made a big capital gain from selling a property back in 2022?
Right.
Does that fall under these new rules?
Well, that's an important question. And from what I've been able to gather from the sources we've reviewed,
Okay.
Income that was earned before December 31st, 2023
Okay.
is actually treated a bit differently.
So there's a transition period.
Exactly. There are specific provisions outlined in something called Orders 161 and 162.
Orders 161 and 162.
Yeah, they basically lay out how income earned before the new system kicked in
Okay.
on January 1st, 2024, how it's taxed.
So if you had any, like, big income events back in 2023 or earlier,
Right.
you need to refer to those orders to figure out how they're handled.
Exactly.
Yeah.
It's not just about understanding the new rules, it's also about knowing how the old rules might still apply.
So much to think about.
It is, and that's why, as we said before,
Right.
getting personalized advice from a tax professional who specializes in Thai tax law,
Yeah.
it's essential.
They can help you sort through all of this.
Absolutely. They'll make sure you're on the right track.
Okay, so let's get back to our case studies.
Okay.
We talked about that retired couple who dodged the capital gains bullet.
Right. Lucky them.
And we touched on the remote worker who might benefit from that LTR visa.
Yeah, if they can meet those requirements.
Exactly. What other scenarios did our research turn up?
Well, one article highlighted a situation that I think a lot of expats might be in. Imagine you bought a vacation home overseas a few years ago.
Right, like back in your home country.
Exactly. And now the market's booming, and you decide to sell it.
Cash in on that profit.
Yeah. So let's say you bought it for $500,000,
Okay.
and now you're selling it for $1.5 million.
Oh, a cool million.
Right. So that's a pretty significant capital gain.
So how does Thailand's new tax system treat that?
Well, that's where it gets tricky again. If you have a double taxation treaty between Thailand and the country where you sold that property,
Okay.
you might be okay.
Okay.
You'd probably only be taxed on that gain once.
So the treaty could be a lifesaver.
It really could.
Right.
But what if there isn't a treaty?
What happens then?
Then you could be looking at a scenario where you're taxed on that same gain in both countries.
Oh, no. That sounds like a nightmare.
It's not ideal.
So these double taxation treaties,
Yeah.
they're not just a bunch of legal jargon.
No, they're really important.
They can actually save you a lot of money.
They can. It's like having an insurance policy against getting taxed twice.
That's a great way to put it.
They're there to protect you and make sure you're paying your fair share, but not a penny more.
But of course, each treaty is different.
Oh, yeah. They all have their own specific rules and provisions.
So you really need to understand the details.
Absolutely. The
Yeah.
one that applies to your situation.
This is starting to sound like a minefield.
Well, it can be if you're not careful.
Yeah.
That's why having a good tax advisor in your corner
Right.
is so important.
They can help you navigate all this.
Yeah, they can help you avoid those tax bombs.
Speaking of bombs, remember how we talked about
Yeah.
the possibility of Thailand eventually taxing all global income?
Oh, yeah, the big one.
It's not currently on the table,
Right.
but let's just imagine for a second that it happened.
Okay, let's play that out.
What would that kind of system look like for expats?
Oh, that's the crystal ball question.
Right.
Well, for starters, it would be a huge administrative headache.
Oh.
For everyone involved, really. For the expats themselves
Huh.
and for the Thai tax authorities.
Oh, yeah.
Imagine all the paperwork involved.
Oh, the paperwork.
Reporting income from all these different sources,
Right.
potentially in different currencies, each with its own set of tax laws.
It would be a logistical nightmare.
It would. And I think it would also discourage some expats from coming to Thailand in the first place.
Yeah, especially those who have the freedom to choose where they live and work.
Exactly.
Yeah.
Why choose a country with a super complex and potentially burdensome tax system?
Right. When there are other options out there.
Exactly. So Thailand would really need to weigh the pros and cons, the
Yeah.
potential benefits of, increased tax revenue
Right.
versus the potential costs of losing out on foreign investment and talent.
It's a tough balancing act for sure.
It is. And it's something that we'll definitely be keeping an eye on as these reforms continue to evolve.
So it's a situation worth monitoring closely,
Absolutely.
even if you're not immediately affected by the current changes.
It's a reminder that things are always changing.
The world of taxes never stands still.
That's for sure. Speaking of evolving,
Yeah.
there's been a lot of discussion about how these tax reforms might impact the types of expats who choose to make Thailand their home.
Oh, interesting. So we're talking about the long-term impact here.
Exactly. Like, will these changes make Thailand more appealing to certain types of expats and less appealing to others?
That's a fascinating question.
It is. Like, for instance,
Yeah.
will we see a shift towards higher earners
Okay.
who can more easily navigate these rules?
Right.
Or benefit from specific visa categories like the LTR?
Makes sense.
Or will Thailand continue to attract a diverse range of expats from all walks of life?
Well, that's the million-dollar question.
It is, and it's one that we'll need to keep watching as these tax reforms take shape.
All right, so lots to think about.
Oh, yeah.
And even more to discuss.
Definitely.
But for now, we're going to take a quick break.
That's good.
And when we come back, we'll offer some concluding thoughts on what these changes might mean for the future of Thailand as an expat destination.
Looking forward to it.
Stay tuned. Okay, so we've been on quite a journey here.
We have.
Deep into the heart of Thailand's tax code.
Right to the core.
Exploring all these new rules and how they're impacting expats.
It's been a wild ride.
It has. We've looked at double taxation treaties, the LTR visa, even peeked into our crystal ball.
Tried to make sense of what the future might hold.
Exactly. So as we wrap up this deep dive, what are the key takeaways here?
I think the biggest one is knowledge is power.
Okay, I like that.
The more you understand about these rules, the better equipped you'll be to navigate them.
Right. It's not about memorizing every single detail.
No, definitely not.
It's about understanding the broad strokes and knowing where to find the specifics
Exactly.
when you need them.
Yeah, because let's face it, these tax rules are complicated.
They are.
And they can have some pretty serious financial implications.
No doubt about it.
So don't try to DIY this stuff.
Please.
Get some professional help.
Yeah, seriously, listeners, this is not the time to be cheap.
Absolutely.
Investing in some good advice up front
Right.
can save you a lot of headaches and a lot of bat down the line.
That's for sure. And another thing to remember,
Yeah.
Thailand's tax landscape, it's dynamic.
Okay.
It's not set in stone.
So what's true today might change tomorrow.
Exactly. So you got to stay informed.
Ongoing process?
Yeah, like learning a new language.
I like that.
You got to keep practicing.
Stay fluent.
Right, to stay on top of things.
So it's not just about figuring it out once and then coasting.
Nope, you got to stay engaged.
Keep learning.
Exactly. Okay, so we've talked about the personal finance side of things.
Yeah.
But what about the bigger picture?
Okay.
How might these changes impact Thailand's attractiveness to expats in the long run?
Well, that's the million-dollar question.
Right.
If Thailand gets a reputation for having a super complex and burdensome tax system,
Yeah?
it could discourage some expats from choosing to live and work here, especially those who can choose to live and work anywhere.
Exactly.
There's a lot of competition out there.
Oh, tons.
Places like Singapore, Hong Kong,
Right.
they've built their economies on attracting global citizens.
Mm-hmm. With their low tax environments.
So Thailand has to find that balance,
It does.
generate enough tax revenue
Right.
to fund all the stuff that needs funding,
Public services, infrastructure, all that.
but also maintain a tax system that's appealing to foreign talent and investment.
It's a delicate balancing act.
For sure. And one that we'll continue to watch closely.
Absolutely.
So, listeners, here's a final thought for you.
Okay.
Think about your own situation.
Yeah.
How might these tax changes affect your long-term plans in Thailand?
Good question.
Do they make you rethink things? Or do you see them as a challenge you can manage?
It's worth asking yourself.
Definitely. Even if you're not immediately impacted.
Right.
It's a sign of things to come.
Yeah, the world's changing.
And Thailand's tax system's changing right along with it.
Got to stay ahead of the curve.
Exactly. Well, thanks for joining us on this deep dive.
It's been a pleasure.
We hope you learned a thing or two.
And had some fun along the way.
Always. Until next time, happy exploring.
See ya.